Hey, good afternoon, everybody. Welcome aboard to 12-Minute Trading. This is Doc Severson, and I have got Dave Lukas here. Today's Monday, the 10th of July. Can you believe it? We're in the second half of the year already. It's been a couple of weeks since we've done this, so we've taken a few days off for the July 4th fireworks and everything like that, and we've had some half days of market and everything like that. We are back. And the market refuses to die, even though we think it should take a rest. But we'll find out here what's going on. We both think, based on what we have talked over the past month, that maybe it's time for a little bit of rotation for the market. We'll see what's going on. So, Dave, what are you seeing in the market today?
Well, actually, it's what I saw Friday that interested me the most. I thought Friday was a really telltale day where we, were up all day long and then gave it all back into close and went to the lows of the day. To me, that's typically a sign of markets topping, at least in the short term. It kind of precipitated a little bit of a pullback, which we, at least in the tech side, we started to see last week. We're seeing a little bit of follow on today. We've had a resurgence in the last 30 minutes or so for the day, but I don't know if that'll hold into the end of the day. In fact, I wouldn't be surprised to see things sell off into the end of the day today. I think this is a lot of zero DTE stuff, people bidding it up to take some profits for the end of the day. But it definitely seems like we've changed a little character back to the downside. And that really does coincide well with what we've been seeing in the energies and the charts, right? We've had a weekly chart that really went into exhaustion a couple of weeks ago, kind of across the board. And it's just been kind of a sideways chart. You rarely see that, right? When you typically have a weekly exhaustion, you typically get a decent pullback, like especially in the midst of a bull market, which we've kind of transitioned back into. You're typically going to see these big moves, these grinding moves higher. We call it quiet and trending, followed by these 3 to 5% pullbacks, sometimes 7%, and then you go to the next and so on, right? And so this is like set up perfectly for one of those 3 to 5% pullbacks, right? We've had a couple weeks of chop at the top, and then we could fall off, do that 3 to 5%, and then get going again. And so it may be a catalyst this week with CPI. We'll have to see what that is. But in the meantime, one chart to watch that I haven't done anything with it yet because I'm watching to really see its hand tip is the Russell. The Russell has been making big moves daily, up and down, but it hasn't really gone anywhere over the last 2 weeks. And it's got a very, very, very highly charged monthly chart, one of the highest I've ever seen. And so when that releases, it's going to be a year-long trend in whatever direction it goes. And so a lot of times the Russell's kind of that, I don't know, canary in the coal mine, we like to say, right? And so you watch that Russell, whichever way it moves, a lot of times the market will follow. But we could see after tech's 30% run up in the first half of the year, some people taking some profits out of tech and rolling into the Russell and maybe even the blue chips and stuff and having them join the party. It would make a lot of sense. Tech is a really crowded trade right now. So that's kind of where we're at, I think. I think this week will be a telltale sign. The end of the week should have a good idea, how we're going to play out.
Yeah, I like the Russell a lot. In fact, I put on a vertical spread this morning, vertical call spread.
Yeah.
On the Russell to see if we can get it to break out. I'm looking for about a 50% return on that. And I don't know if it's going to be able to break above 1900, but there is no such thing as a quadruple top. So when
it's flirted with it so many times.
When you see a market, when you see the price like knocking on that, eventually what happens is that level, all that overhead supply that's sitting up there will eventually release. Mm-hmm. And then typically what you're going to see is some type of a break as the bears flee the scene and the bulls start to pile on. So we'll start to see if that. Now, Dave, what were those NASDAQ levels
I think the Russell about? It's time for the Russell to join the party.
Yeah, that's true.
Say that again, Doc.
I was wondering, you were talking about some of the levels on the NASDAQ. I'm going to bring up the NASDAQ chart. So right now we topped out at about 15,200.
Yeah.
So we topped out about 15,200.
And so if you draw some fibs, you can kind of see from a fib standpoint where we're at. But the levels I'm watching, you can see where if you look at the daily and you look at the weekly, you'll see some pretty good confluences, for some, levels of first, support, right? So like your first, support areas, you're going to see, typically for me, it's like 14,500 in that range right there. There's a pretty decent level sitting right there where we consolidated. Below that gives you 14,000. It's a nice round number. And then ultimately just above or right around 13,500 is, if you're looking at the NDX, is kind of the I think if we're going to do a max pain pullback to from a release on the daily chart, which has been charged up, and really to charge that weekly up, that's where you could get to. I think it's going to be a shallower if we do pull back than that, but that's kind of the
Yeah, I would say even if we got something to 14,000, that would be based on, we're going to have some type of negative catalyst to get it down to there. So this week certainly has the potential for a negative catalyst. We've got CPI on Wednesday, we've got PPI on Thursday, we've got all the Fed speak that we can handle this week, because they're going into quiet periods starting on Saturday. Yep. So the Fed's got to compress all of their. Oh, has it? I only saw 2 of them scheduled. I'm sure that they're the most dangerous place in America is the distance between.
No, there was 4. There was 4, and this recent rally that we've just kind of seen in the last half hour and stuff was Bostic. Bostic came out and it was basically saying that he didn't necessarily see the need to hike anymore. And it was a very razor thin line that they've had to make the decision of hikes on. But you had some out earlier today that were extremely hawkish, right? And that's why I think we've seen the market whipsaw the way that it has today.
Nice. Let's see what else we can look at here. So we looked at the NASDAQ. Let's look at that. And the S&P, let's look at the S&P for levels. So to me, I think the S&P is so simple, because the classic, or the level that this thing is just begging to come down to, is about 4,300. The next level would be about 4,200, but I don't want to see it go below there. If it does, then that basically calls into question any kind of bullish outcome from this. So we are both in, I think, agreement that we've seen a transition to a different bull on the break above 4,200. So that put the bear in the past, much to the chagrin of a lot of people. I think a lot of people are just, once we set up, this was the key, and this is, both of us were talking about this. Let's see if I can bring up this level here. So when the S&P did not make a lower low in December, when it made a higher low and then pivoted off of that, that was pretty much the end of the bear at that point. So we had, and it's a weird one, because I don't think we ever really had true capitulation in this bear. And, we went on record saying that we never really got that waterfall decline, and we never got that really finishing move of the bear. And that may be true. And maybe at some point down the road, we're going to have, round 2 of this thing. But for right now, that's in the past. And a lot of people love to trade in the past. And, I still see people that are still trading 2008 all over again.
Yep. That's what everybody's holding. That's what the bears are holding on to right now. They're saying, a lot, the big bear thesis or argument is that this is just a monster bear market rally, in the .com bubble where we got 40% rallies and stuff like that. And then it fell off the cliff and the real capitulation move happened. So that may be, but I mean, in the short term, we certainly have transitioned back to a bull. I think, AI has created somewhat of a bubble, probably. I think NVIDIA earnings in August are going to be a huge catalyst. I know that he's off, but we have earnings for the rest coming up here, just starting up, in the next couple of weeks. We're going to start to see some earnings. And I think that I think it could be interesting this time around, because I think at this point, a lot of the transition, of being in a down market and stuff, we've come out of that. I think that it's going to be tougher and tougher to beat earnings expectations going forward. The macro fundamentals of the economy are showing a slowdown. And I know it doesn't jive with where the market is and what it's doing. And I think you have to always remember that the market is not the economy, right? And a great example is, I've said this before, right? Market skyrockets higher in COVID, where we shut down the economy for 6 months or whatever and close businesses and everything else, but yet the market's screaming higher. That's a great example that the market's not the economy. So I think for everybody watching, I think there are times where the market does mimic the economy and it comes back together. There's the divergence, it comes back together. Kind of like where you see the divergence of, like right now, there's a lot of charts out of the divergence of the bond markets and like the stock market being, hugely divergent from each other, where they have more of a correlation and you revert to the mean. So we could see that reversion to the mean, in the second half of the year. So we could get a big move, right? Still stay positive for the year, but maybe not go up anymore for the year, right? So that's absolutely positive. If the macro fundamentals that continue to worsen keep up what they're doing, then I think we could see the market at some point kind of have a rude awakening to that, right? Especially with the Fed staying strong. If you asked me a few years ago if they would go this far and continue to raise and stay there, I would have said they would have gone a few rate hikes and that would have been it, right? Because of the debt.
This has been historic.
We're about to put $1 trillion of an interest this year.
We have never seen them raise so fast, so quickly.
And it's typically 18 months or so before you really see the ramifications of that. And again, It's starting to show up. I don't know. I just saw a headline today. The bill in Times Square filed for bankruptcy. So there's another, big place in Times Square that, is now out. That money's gone. The landlord's out. All that stuff is happening, and commercial's a place to watch. Commercial's having trouble, and it's going to continue to have trouble.
So we just got a question that came in from the International Pet Sitter, which is watching us, and I'd like to encourage anybody else that has questions to fire them in as well too. So it says, while Dave hasn't been trading target 100s lately, has Doc continued to make the daily SPX trades? So it was around, I think, March or April that what we started to see was volatility compression coming in really hard. So we had, let's look at a chart here, because we had literally a couple of years worth of, let's see, probably this one here. Okay, so what we're looking at is, and we can actually squeeze this into a weekly chart. This would actually be better. You can see how the volatility, what we're looking at here, the blue chart, is what we sell. And we always want that to be well overstated above what's the tan line here is the realized volatility. So even back here, back in 21, early 22, all the way through this, and then into October, this is where we saw a huge edge of volatility. So pretty much everything that we sold, we could get it far enough away to give ourselves some distance. Well, what happened was the market started to price in, and this is where we started to see, the higher low come in. And the big tell here was that during this pullback in December, we never really got a spike in implied volatility. This is kind of a long-winded way of answering your question here, but basically what we're seeing is the transition to this market also means that we have to be very, very careful about where we sell right now. So there's a couple of ways that we've dealt with this to deal with this volatility compression. First of all is, instead of going, at least myself, speaking to myself here, instead of going to the high probability, so the true, like picking up nickels in front of the steamroller type of trades, what I've actually done is go closer to the money and look for very specific technical triggers to look for consolidation where the market's like screaming higher, pauses for a couple of days, and then we're selling closer to the money, which are faster trades. Also better risk reward and much better swan risk handling for that. So we've done that. So are we trading those every day? No. Now we're trading them specifically when we get the signals. So we have to sit on our hands until we get the signals, and then we're all in. The second thing that we've done is more of the kind of like grinding the wheel, doing the clockwork, is when you have volatility compression like that, when you have, literally you're picking up crumbs of volatility that you're selling, you go further out. And this is also what Dave has done too with his double doubles, is go further out in time, maybe even 6 months. Myself, I'm going about 45 to 60 days or so, and we're just selling twice a week. We're just selling these iron condors. We're rolling up the untested side. We're managing them as best we can. We're trying to be as random walk as possible so we don't get, wrapped over the axle on technical analysis. But yeah, we're still quite active in the room right now, even though we have very little volatility, and we're setting ourselves up for the next time we do get a vol speak. What is the volatility tool that I'm using? This is implied versus historical. This is implied versus historical. And what's also important from this is that you can see an IV percentile right up. Oops, I'm not showing the chart. You can see an implied volatility percentile that's up there, which basically is showing you, it's almost like a gauge, just a reference gauge. It's showing you over the last 252 days. In this case, 11% of the volatility levels have been lower than what we're seeing today. So we've seen a little bit of a spike in implied volatility as we get into this week, because we've got, obviously we've got CPI, PPI, we've got earnings starting for the second quarter at the end of this week. So there's a little bit more risk that is coming along. So hopefully that answers your question.
We're going to see. I think we're going to see some volatility come back in. The July is traditionally a very low volume month. The first 2 weeks of July are typically positive, and the back half July is typically pretty volatile. So we got through the first week, we're into the second week, and we really haven't done much, right? We've had a little bit of selling and stuff, but we haven't had any massive moves of real fear that in the market. Now we may see that, with CPI and stuff this week. We'll see there, last month, I believe the consensus was for 4%, CPI print. Now it's 3.1. That's a pretty big difference month over month and drop. So, CPI might come in higher than that. I think we actually may see inflation tick higher in the back half of the year for a number of reasons. I think commodities are about to be back in favor. They've been in a bear market, and I think they're due to come out of that. So you may see oil can go higher. And that's really the underpinning of everything, guys. Oil is the underpinning of all inflation and everything, because energy is what drives it. It's the biggest component, and it's used in so many products. So if oil goes up in price, then you're going to get inflation. That's just the nature of where we are. But at the same time, we're seeing some divergence too across the world. Today it came out that China is now deflationary. China's deflating. That is actually, that's a negative sign, a pretty negative sign for their economy, right? Talking about the macro level. So I think the back half of the year is going to be a lot more volatile than the front half. I think AI, is got the hype going, but I don't know if it's proven itself to actually manifest what everybody thinks it is. Everybody piling ahead, right? Markets trade ahead of time. And so in the back half of the year, we'll see if it actually has the promise that it says. There's some cool things that quote unquote AI, which a lot of it's machine learning, not true AI, can do, but we'll see what happens there. Back to the one question on target 100s, it's going to take that downward. We need that 3 to 5% pullback to generate the volatility and get get some fear in for me to get back to doing those. Now, one thing that I'm toying with doing is just picking a side each week, right? And just saying, okay, this is the trend, so I'm going to sell to one side and let the market run away from it based on what I think is going to happen. It's more speculative trade, but I used to do it. I used to call it the fractal trade. So I used to do it basically just on the energies themselves, really nothing else, based on where the energies were. And so I may get back to just doing that if we don't get so much volatility. It'll be easier to probably sell put side. Honestly, and let the market, either consolidate or run away from it each week if we are, back into a quiet trending market. So those actually get a little bit easier. So I do want to get back into that. It's just, need a few more things to happen first before I'm ready to do so. But in the
Here's
meantime, the rest of the trades are working out pretty well.
here's going to be the big test for AI is if we see an AI stock picker actually uh, recommending that you sell an AI stock. If we
Yeah,
ever get to that
exactly.
point, then that will be the point of credibility that we could start to believe in.
Well, I mean, like Nvidia is at like 200 times earnings. Okay, so
Yeah.
like, I mean, those are just ghastly, numbers. Like, I mean, the best companies in the world, have high ratios like that. But to be that much, I just think, at some point there's going to be some profit taking off of Nvidia. That's why I said the earnings announcement in August is going to be a big event, a big market moving event, I think. So, yeah.
Absolutely. Any other questions for us while we're still on here? And of course, probably most of you are watching this on a replay anyway. So if you have any questions that come in that you want to include on the next episode when Dave and I get together, please let us know. Just email us at support@12minutetrading.com. We'll make sure that we get your question inserted into the next show that we do.
I think for the rest of the week, guys, I think today's kind of a muted day. Not surprised on that. We may see some selling tomorrow. But if we get a big move like higher tomorrow, that tells you that somebody knows something about CPI. So, and we've seen that before. So, sometimes this data gets out, it gets leaked. So we'll see. But I think, telltale sign will be kind of what happens after 2 p.m. tomorrow, ahead of that CPI number coming out. If we run hard into that, tells you that there's probably it's going to be better than expected, or it's going to be in line, and they're front running it. Somebody's got the news. If we sell off pretty good, that could be a telltale sign that the CPI is going to come in higher than expected and stuff too. So
Somebody
I think
always
that's something
knows
to watch
something.
for tomorrow. And then, yeah. And then, bank earnings will be interesting at the end of the week.
Yeah.
High interest rates aren't necessarily good for banks, right? In fact, if you look at like what brought down Silicon Valley Bank, right? The mark-to-market losses on their bonds, right? Well, like Bank of America is sitting on 100 billion of those. So same type of loss that Silicon Valley Bank has. Theirs is tune of 100 billion. Now, Bank of America is a completely different animal, right? And I'm not really worried about a run on Bank of America, but it'll be interesting to kind of see what their profits and stuff look like, their lending looks like, because I know less is being done lending space, commercials getting hit. So the bank should be an interesting catalyst too this week.
Yeah. And then the market's almost on its own. So next week, I'm not sure what we're anticipating in terms of risk. So it's not till the 20th. Actually, next week is going to be mostly earnings, because we're going to get, like Wednesday, we're going to get Netflix and Tesla after market close, and we've got plenty of things. Monday is surprisingly lame next Monday in terms of earnings, but Tuesday, Wednesday, Thursday is pretty much going to be the earnings show. And then the week after that, we're going to be at, the next Fed meeting. So there you go.
Well, one thing that's happening in tech, to pay attention to is the Qs, the QQQ on the 24th of July is going through a rebalance. So I don't know if anybody's seen this out there, but the headlines are starting to hit. Look it up. The Qs are going to go through a rebalance where they're going to rebalance everything across that index so that it is not so concentrated in those big, 6 to 7 stocks. I don't know what that's going to do to the Qs. I don't know if it's going to change anything, or if it's going to cause it to dip some, or if it's going to cause it to maybe not move like it does. But I think that's something to pay attention to.
I've heard about stuff like that. I mean, a rebalance is a very common thing across the indices, and everybody makes a big deal out of it. Like, oh, look out, they're going to rebalance it. And that never really pans out to be anything. It's usually a big nothing burger when it happens. But that's a good point, though. Be aware of that when that happens.
Yeah, all right. I have no clue if that will change anything, but it happens on the 24th. So that'll be just a day to mark your calendar and then see what happens from the 24th on, if it changes how that index moves at all.
All right. Well, nothing heard from the crowd. I think we're good for today. So I wanted to thank everybody for showing up today and digging in, and appreciate you guys, showing up when we do here. Plus, of course, for those of you that are watching this on a replay, thank you very much for doing that. We appreciate the watches, and let us know where we can go with these things in the future. So Dave and I are out, and appreciate you guys checking us out. We will catch you next time.
Thanks, everyone.
See you.